Okay, welcome to the section where we are finally going to be putting everything you've learned in the course together into one fluid motion. And I figured what better way to do this than to actually break down a trade that I've taken recently today. So at the time of filming this video, it's April 14th at about 10 a.m. Mountain Standard Time, which is not usually, it is almost noon New York time. So I took this trade at about 10 a.m. New York time, which is 8 a.m. my time. And yeah, I'm going to go ahead and break this down in from all the way down from the weekly chart down to the 1 minute chart and show you this trade to show you what I'm doing in the market basically every day. Okay. I'm going to go through this as like a narrative. And as I'm narrating it, you're also going to see all the confluences that I see in this example to take this trade. Okay. So we're going to go from the weekly all the way down to the 1 minute and break it down. Now, I just want to preface this with a few things. First of all, I'm not usually catching trades this big. This is a bigger trade for me, and I don't want you to think. I just want to lay out the expectation for you that you do not have to catch trades like this. You do not have to be catching, 18 to 20 R every day or even every month. This is like one of the biggest trades I've had in a while. I would say this is probably the biggest trade that I've had in the last 2 months. Normally what I'm doing is just scalping a 5R trade usually, or a 3R trade, something like that. This is a big trade. So I don't want you to get overwhelmed or confused or feel defeated because you have to do stuff like this. I just feel like this video and um, this trade that I've taken is going to make a very great video for this section of the course because you're going to be able to see everything that I'm seeing and it's fresh in my mind. And I just took this trade like literally 2 hours ago and I still have an open position on it. So that being said, let's go ahead and get started. As you may or may not have noticed, I use two different feeds for my course content in my VIP group compared to what I actually trade on. So this is the chart, the Oanda feed that I actually am, doing all of my personal analysis and, personal drawing tools and stuff on. And then I use an actual different feed, which I have open, which I'll get to in just a second for like the course and stuff. But before we get there, I do just want to show the entry here. There's going to be a lot of people that watch this and say, well, I want to see proof. Anybody can draw this risk to reward tool. So this is the actual proof that I drop. I normally do this for the VIP group that I have, which is more so, it's not in-depth information. It's just market analysis and trade recaps, where the course is obviously teaching you from, the ground up how to be a consistently profitable smart money trader. And so I have this on here for two reasons. I'm going to be using this video in my VIP group as well as my course. So I'm kind of, feeding two birds with one hand with this video. And so yeah, the entry and everything and the stop loss is right here. Now let's go ahead and go over to an actual blank chart and do our top-down analysis. So on this chart here, we have the weekly pulled up. This is the weekly time frame on AUD USD. And I'm just going to kind of, I guess, again, preface this with I don't necessarily do all of what I'm going to do in this video every day. So looking at the weekly chart, I do that maybe like once a month, maybe probably even more realistically, it would be like twice a month that I'm looking at the weekly, or once every 2 months, I should say, is that when I'm looking at the weekly chart. I check the daily usually every day, but I just glance at it. I'm more so looking at the 4 hour and the 15 minute, in my day-to-day routine throughout the week. What I'm doing right now would probably be something that I'm doing at the beginning of the week when I'm analyzing my charts, or if I'm recapping the week, I would be going this in depth. So I just want to let you know that you don't have to necessarily do this every single day or even every single week if you don't want to. If you can remember what's happening on the weekly and the daily, you can skip, basically down to the 4 hour to do your daily analysis that you're doing, or even down to the 15 minute once you get more established as a trader. So I don't want you to get overwhelmed by what I'm doing here. And I also don't want you to think that any of this is even like required on a daily basis. This is just, again, we're putting everything that you know into one fluid motion and adding all of our confluences in, and then actually looking at a trade that presented itself today at the time of filming this video. So let's go ahead and get started. No more rambling. Let's go ahead and just get on with it and show you what we're looking at here. So the weekly chart, this is about as far back as I'm going to go because it's really the only thing necessary to paint the picture for what we're doing. You can, if you want, you can zoom out in the market on the weekly to see a bigger picture time frame. But for me and for the majority of the people, we don't need to go back that far in time because we're going to be trading in like this candle right here, so we don't need to know what happened a year or two ago. So what I just drew on the chart is we have a break of structure right here, retracement up into this zone here, continuation and break of structure, right? So at this point in time, if you're trading at this low or in this low somewhere in here, the expectation is that price would eventually return to this supply zone, right? Obviously it does in the future, and obviously it trades right through it and wicks this old high, okay? So at this point right here, this is a liquidity grab, and we can see obviously that price sold off from there, okay? So now what else do you see when you look at this? Well, you see, if you look a little bit to the left, you can see an unmitigated supply zone right here that price tapped into when simultaneously wicking this high. So above this high, there would have been a very large amount of liquidity. This is a weekly swing high. So there would have been a huge amount of liquidity right here and an unmitigated supply zone. So we can see price wicked that. It did not break the structure. So we still are favoring our bearish break of structure here and a bearish overall market. And the expectation is that at some point in the future, obviously this could take a couple months. This could take the rest of 2023. Like, we have no idea of knowing, but at some point in the future, this weekly low is expected to be taken at some point, unless obviously we get a very clear sign of a market reversal at some point in the future. But without, we can't predict the future. We don't know what's happening. All we can do is frame our expectation of, what's happening with the order flow. Okay. So at this point in time, I'm just going to remove this supply zone because it's no longer valid. And I want to keep the charts really clean and, just keep it to a minimum so that I can also kind of get you to start seeing how I mark my charts up and how I actually trade versus like having all this extra stuff on here. So now at the weekly, now that we have the weekly marked up, that's pretty much it that I do on the weekly. I don't even, I don't even really have this stuff on my charts now that you see that. I usually just keep this because as I drop down in timeframes, it's just going to become a mess. And so let's go ahead and drop down to the daily and we'll walk through what's happening there. So on the daily, we can still see the same thing that happened previously. However, it is now a little bit cleaner. There's more candles and we can see a little bit more of what's happening. So let me just go back up really quick and let me make this visible on all time frames. So we know that this is our major low that we're favoring, okay? So then back to the daily, we can see that price did sell off here and it then broke. We have this little swing low, which if you remember any of the videos in the past, we do have, this was a confluence that we were looking at for a swing right here. And it did actually break structure, as you can see right here. So let me just actually mark this up just so you can see what I'm seeing. I would make this low a strong low, but it did get broken, right? We have a break of structure right there. There we go. And then we have this. This is an old break of structure, but I'm just using this to annotate what's going on right here, okay? So we have a pullback, continuation that breaks structure, runs up, wicks up here. We have this little wick, pullback, continuation, failed higher high right here. So at this point in time on the lower time frame, let's go ahead and zoom in. This is a pretty clear indication of the market reversing. So we have a pullback, attempted rally. It just wicks this high and simultaneously wicks this high again. But let's just focus right here for right now. Wicks this high and then violently sells off. So we can see, this on a lower time frame is going to be swing break of structure. This right here is our daily, well, I guess technically this is our daily change of character. At this point in time, this would be a daily break of structure. And then we also have even more confluence down here with a daily swing break of structure. And so this is something that we've talked about in the course that basically depends on how you perceive the structure. It doesn't matter, if you consider this your change of character and you're trading in this direction, that's totally fine. And you're not looking at this swing structure. However you want to mark swing structure is up to you. Again, it's going to take you time to apply your own understanding to your own charts, and it's okay if it's different than what you see me doing here. Okay, so we have a clear reversal, pull back up into this newly created range right here, continuation, little pullback, continuation, and break of structure. Okay, so at this point in time, when we have this daily break of structure, the new range that we are now playing in is from here to here. This is our daily range. Okay, so from this high to this low, and the price, it would now be expected to pull back up anywhere into this zone right here to mitigate some of this supply. Okay, so we have a supply zone right here. You'd not be wrong in refining it to just that candle, which is what I do. We also have a flip zone that took liquidity right here. So again, from previous videos, this is not something that I favor a whole lot. However, it is, it is possible that the market would reverse from that zone too. And then I guess if you wanted to be really specific, we have this zone right here, right? However, I always am favoring this extreme in my trading and in my expectation because of many reasons. One, this is, obviously if you wait till the extreme, you're minimizing a lot of potentially wrong trades that you could be taking in here. So you're minimizing a lot of losses, and then you're also waiting until the actual point that took liquidity. Like right here, this pullback and continuation, this wick took a lot of liquidity because it took from this right here, and it also then wicked even up higher above this high. Okay, so I'm just going to always in the back of my head favor this zone, but these are also zones that could be that we could get a reversal from as well. Okay, so again, this is just I'm just developing my expectation of what could happen. I also understand in the back of my mind that price can trade up into this zone right here where it's at and reverse and continue down. Like price doesn't have to come all the way up here. It doesn't have to do anything. It can also just sit here and range forever. It could range for the rest of the year right here. It doesn't have to do anything. These are just the benefits of, smart money concepts and all that stuff, is being able to establish an expectation of what you think should be happening. Okay. So now that I have that drawn on, I'm actually going to delete this fib tool. And we just know that our expectation now is, because of this break of structure, this old swing low, this rejection from this supply, all this liquidity, this reversal sign right here on the daily, we know that it's likely that our higher time frames are realigning to the pro trend move. Okay, so we know that it's likely price is going to come up in here and do something like this and then target this low. So that's the expectation as of right now. Now, like we said, this could be the end of 2023 before this even happens. Who knows? We have no idea, but this is our expectation of order flow, or the expectational order flow that is developing based on our analysis. So now let's go ahead, and this is something that I do, on basically a daily or every other day basis, is mark up the most immediate daily range. Okay, so I can see we have a reversal right here. Obviously, price is getting ready to pull back up into this range. I can see a daily low right there, and I can see a daily high right here at this point. And I can also see that price right here wicked high. And now the expectation, well, when I was sitting down to trade this morning, the expectation is that price was going to pull back into this zone right here and continue up higher. Okay, so this, on a big picture, like on a more macro level, is our expectation, but on, as we get into the lower time frames, our expectation is more so like this, right? That's the more immediate expectation over the next week or so that we would be coming to. Okay, so now that I have that marked up, I'm going to go ahead and drop down to the 4-hour. Notice I'm not really, I'm not really marking like every high and every low because I'm trading the lower time frames. I just need to know a general idea of what's happening on the lower time frames, or excuse me, what's happening on the higher time frames to trade the lower time frames. I don't need to know all of these supply zones. I don't need to have all this stuff marked up. I'm doing this more so for your frame of mind and your learning so that you can frame, you can help, it can begin to help you understand what we're looking for here. Okay. So all at this point in my mind, all I know is, all I'm keeping in my mind, I should say, is that we have a breaker structure right here and we're in a pullback in this zone. Okay. Another thing that I would keep in mind, like I'm not going to have all these drawings and stuff on my chart. Another thing I would keep in mind is that this pullback right here, price action is going to be messy. Why? Because pullbacks are always very corrective. They're horrific price action. If you go down on lower time frames right here in this area, there's a lot of confusing price action right here and it's a mess, right? But I would expect now that because price is beginning to break free and a lot more volume is coming into the order to facilitate this pullback, that we now may start to have a little bit cleaner price action, but we don't know because, again, it's a pullback. Price action is always going to be messy. And if you need more, we talked about this in the beginning of the course, and I'll just touch base on it really quick. When we're pro trend, like look at how much movement is happening right here, pro trend. Look how many candles it takes to have this pullback. And then look how little candles it takes to facilitate this continuation right here. And then look how many pullbacks and how consolidated this market is. Or look how many candles there are in this pullback and how consolidated this market is as we begin to facilitate this pullback, right? There's so many candles in here because it's a corrective market. It's, the market is correcting this movement here and they're buying back up into this range, and it's always just not as clean as when we actually realign with the pro trend higher time frame move. Okay, so let's go ahead and drop down to the 4-hour now, and we'll see what's going on here. So at this point in time, I have my daily low right here, and I also have my daily high right here, and I can also see that I have this this wick, right? So price did not actually break structure right here. So this implies that it was a liquidity grab. It could also imply that potentially this is going to become a weak low in the future, but we really have no idea when that's going to happen. So what we're going to do is we're just going to play within this daily range until we have a clearer understanding of our expectation or a clearer direction that the market wants to go. Okay. So on the 4-hour, what do we have? Well, I can see back here, and also you can see this on the daily, but it's a little bit easier for me to see it from back at this point. This low right here was wicked by this move right here. So that's a liquidity grab. I know that's a wick on the daily. And I know that, so basically what happens now is this is a demand zone that took liquidity. So this is going to be a very big magnet for price to return to, right? That's actually going to be, for me, the only zone that I would really be favoring unless I get like super clear confirmations from something up here. So I'll go ahead and, just for the sake of this video and for the sake of teaching, I will go ahead and mark this on here. So we do now have that demand zone that's visible as well, right? They're also, you're not wrong in saying this is the demand zone right here. We also have this little pullback, so we can mark this as our low right there, right? For the sake of this video, I'm just going to delete this, but we obviously know that this is our expectation based on the higher time frame moves. Now, it's going to be confusing to some of you or contradictory to some of you because we have a failed higher high right here, right? So as we drop down on time frames, down like back up to the daily, this didn't actually break structure, right? So what is this a sign of? Well, it's a sign that potentially the market could come down and take out this low and reverse, but we don't have any real confluence of that. What could be happening right now is price just failed to break above this, and it needs to come back get more of this internal liquidity on a lower time frame, and it's going to rally up and break above that high. It just needed a little bit more liquidity to fuel that momentum. So that's why we need to remain open, is we don't really know until after we get a clearer indication of what the market is doing, right? So back to the 4-hour, we can see very clearly that this failed to break that high. We understand our expectation is that price would do this, but it doesn't have to do that. It can do whatever it wants to do. So I'm going to clear that out to keep this nice and clean and clear. And let's go ahead now. We have our zones marked on the 4-hour. Again, notice I'm not, drawing every high, every low, every little demand zone. These are just my, honestly, on my own charts, on the stuff that I keep, that I'm not, the chart that I'm not teaching on, I only have this zone drawn on because it took liquidity and because it's such an aggressive move away from that. And because of the fact that we have a filled higher high right here. So as we get lower on time frames, I'll break down kind of the confluences, but basically this is all that you really need to have drawn on your chart to go down now to the 15-minute. Okay. So down on the 15-minute, what do we see? Well, we see the same thing just with more candles. And we can also start to then see what's going on up here with our reversal and our failed higher high a little bit more clearly. So we have this obviously very sharp buy up that wicked that original old high. And we then have a pullback from this high down to this low, and price comes back up and attempts to make a new high. However, as you can see, it just wicks it, right? We have a wick right there. And then shortly after that, this was a news event, which if you want to look at Forex Factory for April 14th, you can see that there was, I think it was core retail sales, something like that. I can't remember. I don't really pay that much attention to the news, but I just know, I just want to start, showing you guys that like a lot of this stuff is hidden. These moves are hidden or masked with news to make it seem like, oh, all this aggressive, stuff happening in the market is because of people reacting to the news, when in fact it's just a basically like a way for smart money to mask their huge injections of orders into the market. Okay, so we have that wick. We then have, oops, one second. We then have, after that wick up there, we have a sharp sell-off that breaks this pullback. Okay, so if you had, let me just replay this really quick. If you're at this point in time, right, your expectation would be that, you could even potentially frame a trade right here if you were trading at this time. This is like 7 a.m. New York time. So if you were trading at this time, you would not be wrong in taking a trade to target up here. Okay, so I want to get that out of the way, that there are, you're going to start to see things, and hopefully you are seeing these things that, like, yes, you could be trading in here, counter trend. Yes, you could be trading, from this zone. Maybe there's confirmations to take that lower. When you see this break of structure right here on the 15-minute and this retracement into this demand zone, yes, you could set a pending order right there and target this high. Yes, you could drop down to the 1 minute and target this high if you're trading at those times. And that's totally okay. And these are the types of scenarios that I look to take advantage of and capitalize on in the market. And the conclusion that I'm coming to in this video is just based on the time that I'm trading and the confluences that were presented at that point in time. Okay. So yes, the expectation is that price would break this high and continue to do that. However, at what time we see, I'm just going to jump back to, well, let's go ahead and just play it through now from this point on. And we'll see, kind of the confluences that we get. So the expectation would be that this remains a strong low, okay? Because of this pullback, because of this, 15-minute change of character that's right here, and then a 15-minute break of structure that's right here, retracement to demand zone and continuation. The expectation is that this would remain a strong low. Now, obviously we already know that it doesn't, but let's walk through what actually happens. So we have that wick, and that at that point in time is a failed higher high. So our expectation is, okay, it's pretty likely that this at least 15-minute pullback into this zone is going to happen. If not, 4-hour pullback to come down here and mitigate. If not, this low, which we'll go over this towards the end of this video, but this low being taken to indicate the daily time frame reversing what it's doing now to continue the pro trend move. Okay, we'll get to that in just a minute. But our expectation now, or our understanding now, is that at least a deeper retracement is going to happen. Okay, after that point in time, we can then fast forward the charts a little bit. Let's see. It pulls back a little bit and then it continues, right? And I think at this point in time, the trade I took was in here, but I'm just going to go ahead and narrate this, and then we'll go back down to the lower time frames. Okay, so we can then see price violently sells off and comes down, and at the point of filming this video, it's actually just mitigating this demand zone. And if you actually look right here, there's a more refined zone that it's having a reaction from right now. And so you would not be necessarily wrong in taking all of your order, because the expectation could potentially be, this is where it gets, you have to read between the lines. You have to manage your expectations. You have to understand that you don't, this is not ideal trading conditions right here. This failed higher high. What does that mean? Does it mean that price is now going to come down and take out this low, and the market's going to reverse, and we're going to start heading back down to our weekly low, which is somewhere way down here, or maybe it's not showing, but you get what I'm saying, that the weekly low down there? Or is price just failing to make a new high right here, and it just needs more liquidity, or it needs to mitigate this demand, and it's going to continue back up this way, right? This is where you have to manage your trades accordingly. You have to manage your mindset accordingly, and you have to manage your expectation, most importantly, of what is realistically going to happen. And in my eyes, at the time of filming this video, it's more likely that this is going to reverse and continue because of that higher time frame daily range, right? We're expecting that price would want to come up into this higher extreme on the daily to mitigate that before going lower. Now, it doesn't have to do that. It doesn't have to do anything, okay? And hopefully this isn't confusing you, but what I'm trying to do is keep you in an open state of mind to understand the possibilities and the expectations, okay? So let's go ahead and break down the actual trade now, and let's go down lower time frames, and I'll show you the actual trade that I took today and the added confluences of why I took it. So as we know, this is now a 15-minute break of structure, and we can drop down to the 5-minute to start looking for reasons to frame a trade, okay? So right in this area is where I sat down and I was noting the market right here, and also right here, looking for what was developing in price action. And when we got this 15-minute break of structure, I was expecting price to come up and retrace higher up into this range and mitigate this wick, which it doesn't obviously have to do that, and it didn't do that in this case. And so there was a few other confluences on the lower time frames that allowed me to capitalize on this move, okay? But again, I just want to show you, price does not have to come up into the extreme. It does not have to mitigate this wick. It does not have to come up above the equilibrium. It can do whatever it wants, and when there's very aggressive momentum, usually you will see really shallow retracements. This is very shallow. It does not go deep into this range. It just barely comes back up and continues on, right? That's a lot of momentum coming into the market. This wick right here, this one candle this is a 5-minute candle right here, is 42 pips on one candle, right? Overall, from this high to this low is over 100 pips. That's a lot of money being injected into the market. And when you see injections like this, when you see aggressive sell-offs or aggressive buying, and you have candles like this, you need to adjust your expectations that, okay, this is fast. This is a huge amount of money coming in. This is like an aggressive sell-off that is probably not going to come all the way back up in here. If it does, great. That's even more confluences to take a trade from up in this zone. But you need to understand that like the momentum in this trade right here is so fast and so heavy that we need to just be ready for anything to happen. Okay. So at this point in time, let's go ahead and just start breaking down the actual trade, because on these time frames right here, this morning, I didn't even look at the 4-hour or anything like that, because I can just see, okay, 15-minute right here, we're getting ready to reverse, we're going to pull back. I'm only caring about little moves like this. Okay. So for those of you wondering, my day-to-day routine or what I do before I sit down to trade, I'm just looking at this right here because I already know in the back of my mind, okay, we have that wick right here from yesterday. And this, the expectation was that it was going to pull back and continue. It obviously failed to do that and broke the structure. So we know at least we're going to pull back into these lower zones right here, if not deeper retracement into the 4-hour, which is what I'm expecting, if not breaking this low, which in the back of my mind, I also know is realistic. Okay. So I'm not necessarily doing everything that you've seen prior to this. I'm more so doing from here on, like from this point in the video on is my day-to-day routine. Okay. So the rest of, just to elaborate, the rest of what you've seen is more so like when I do my weekly outlook in the VIP group, or for myself, I am doing all of that stuff on more of a weekly basis. And so from this point on is more of my day-to-day basis. Okay. So again, we have this break of structure. Let's drop down to the 5-minute. We can see right before we broke structure, we have this little flip zone right here. And maybe it did at some point wick that low, but we can see, we have a decent flip zone right there that price is, pulling back up into. Okay. Also, at this point in time right here, we have a 5-minute change of character. Okay. So annotate that right there. We have a, the flip zone formed, continuation that breaks the 15-minute break of structure. At this point in time, we would expect price to retrace back somewhere up into the zone before continuing off to sell lower. Okay. So right here is our indication that, okay, the pullback is done, and this little 5-minute change of character is going to facilitate the 15-minute move. If we jump back up to the 15-minute, you can see it's not as clear, but you don't necessarily have to drop down to lower time frames. Okay. You can see right here on this candle closed right here and then opened here. It went down and then it closed way up. This candle opened, it wicked that high, failed to go above that. So on the 15-minute, this is a failed higher high. So we have a wick right there. And then it comes down, gives us a change of character, it retraces back up, and this candle actually closes right here and then sells off. Okay. So on the 5-minute, what does that look like? That looks like this, a change of character. So we have this little pullback. This candle right here failed to break this candle's high. So that makes this our low in the market, and it gets wicked right here, causing a change of character, right? We now also know, okay, this candle, well, actually I'll leave that on there. That candle wicked that high. So to some degree, that took some form of liquidity right there, and it would be likely that it comes back to be mitigated, okay? So now, at this point in time, you would not, if you were just trading the 5-minute, you could definitely just enter a trade like this. I guess you'd be including that as well. You could, as soon as you saw this wick, you could just have an open order right here, and it would have been tagged in right there. Stop loss right above that little wick. And you could either A, target predetermined risk to reward. So whether that's 1 to 3 or 1 to 5, or predetermined technical level in the market. So like this demand zone, this low, something like that. You could definitely do that. Okay. That's not wrong by any means. There's probably a lot of people that are going to be trading like that and, avoid some of the confusion that comes along with the 1-minute. Not that it's hard or confusing. It just requires a different level of perception. So you would not be wrong in taking something like that. However, for me, I'm looking at the 1-minute usually, and I'm scalping smaller moves. And so let's go ahead and drop down to the 1-minute and see what's going on. Okay. One thing I just want to note really quick too is before this sell-off, this would be your main low that you're targeting. Okay. Now I didn't actually take a partial here. I held the majority of this, like we mentioned, to like 18-hour gain, which I'll break down here going forward. So at this point in time, when I see that 5-minute change of character, I would be dropping down to the 1-minute. And we can see right here, okay, we have a 1-minute break of swing structure. It's not very aggressive, right? It doesn't come way down here and go back up, which would also imply that if you're only looking at the 1 minute, that this would be a wick on a higher time frame, okay? Because it's not super aggressive. It doesn't trade way down past it. It just barely breaks below it, comes back up. And at this point in time, when we have this 1 minute break of structure, which is a 5 minute change of character, we can then expect, okay, now we have this newly created 1 minute range. We would be marking this from that high to that low, and we would expect price to trade back up into a supply zone above equilibrium, okay? So above this 50% line, let me just zoom in really quick. Above this 50% line, and we have this extreme supply zone right here that did cause that wick and, you know, took liquidity, okay? So we would expect that this on the 1 minute time frame would be mitigated. And so myself, I just put a pending order right here on that with a stop loss right above it. My minimum is a 2.5 pip stop loss. I don't ever go lower than that. I don't ever go to like a 2 pip or anything like that just because of spread. However, you could, you know, I guess you could technically do that, but I would always recommend leaving it a little bit of room for the spread. And so I had a 2.5 pip stop loss. I know that, you know, I know it's likely going to come back up, tag me in and continue. And so let's go ahead now and get into like the more technical targets and managing the trade. Okay. So you would not, at this point in time, you would not be wrong if you took majority of your partial right here, right? You would not be wrong. There's many reasons why I didn't do that. And I want to kind of break down the differences between, you know, having a bunch of rules and versus like having a little bit more freedom in your trading, which is what I tend to lean towards. And at this point in time, yes, a 1 to 5, that's great. You know, if you catch a 1 to 5 3 to 5 times a week, that's great money. You're going to be, you know, you're going to be set making that. But there's going to be times where you want more or where you feel like the market can go more. Now, why did I hold it past this? Why did I hold it longer? Let's rewind a little bit. Well, we have this 15-minute break of structure that's going counter trend. So we know that at least a pullback is going to happen into one of these lows back here, if not all the way down to this 4-hour zone that took liquidity, right? Also, we know that the pro trend is bearish on the higher time frames. We are in a bearish downtrend on the weekly and the daily. This is just a pullback. So at any point in time, the market could reverse and keep going. We don't want to try to predict that, but we know in the back of our mind that that's a scenario, you know. We also know that right here, okay, let's go back to this high, somewhere right in here. It may not be perfect, but for the sake of this video, I'm just gonna paint the picture. At this low, I don't know if I'm gonna be able to get it with the 1 minute, so I'll just snap it right there. At this, right here, in this range right here, we would expect price to come below this equilibrium, okay? So there's another confluence. We also have this demand zone that it's currently having a reaction from right here. We also have this higher time frame demand zone right here that we can expect price to be mitigated, again, if not continuing lower, right? So those are confluences to why you can hold it longer, because we know that it's likely we're at least going to facilitate this pullback right here. So we're trading the pullback on the 15-minute, and we now understand, okay, there's a few things that could happen. And this is where trade management comes into play. I'm going to delete this and clean it up, okay? Trade management comes into play in situations like this. Are you fine with that gain? Are you fine with, okay, I know that it's likely that on the 15-minute price is going to do something like this, and it's going to start running back up. It's not guaranteed that it's going to do that, but there's a possibility that it does, and it comes back up into this high, right? Because this is just a bigger 15-minute pullback, and we're catching the continuation to go higher on the daily right here. Or like if that happens, are you going to try to catch that? Or if it doesn't happen and you close your price maybe right here and it continues to go lower, are you going to be upset that you didn't, you know, hold it even longer? Are you going to look to get back into a trade to go lower? Like these are all things you need to consider. And so for me, obviously a gain like that is huge. Like I don't need to, I don't need to like actually, predict that far in advance to make money. Like I don't really care, honestly. The frame of mind that I have, I don't really care. I just caught this pullback. It's Friday. I'm going to close out this order. I don't really care what's happening. Like, just leave it at that. But obviously, you need to understand how to get to that frame of mind to where you can just not care. And that comes with your trade plan. That comes with knowing, like, okay, I know that if price does this, then I can get in right here and come back up. I know that if price does something like this, I can then continue to take it lower, because eventually it has to pull back anyways, regardless of what it's doing in the future. It still has to pull back from this move. So there's going to be plenty of opportunities to adjust from there. Okay. Especially if you're trading, the 1 minute or the 5 minute time frames, there's going to be plenty of opportunities. Okay. So let's go ahead and get back on track. I'm getting a little bit off track, but also I'm trying to make this like as informative as possible so that you can see, kind of the expectations and the frame of mind that I'm in. So for me, I knew that it was very likely that it was going to retrace at least down into a zone like this. And so I was fine holding my profit longer. And so I closed this at like a 1 to 17, somewhere in there. So let's say, just for the sake of this video, right there, somewhere right there is where I closed it. So yeah, somewhere in this area right here. And I want to just kind of talk now about why I held it for longer and why I didn't take a partial at my 1 to 5, why I went kind of against my normal trade plan. And that's because of a few things, right? It's because this right here on my broker was a huge gap. So this did not, this price right here on the broker was just a gigantic gap. It did not have this liquidity gap. It just literally gapped down below this low, which obviously is a huge injection of sell orders. Okay. So I knew immediately, okay, it's pretty likely that this is going to be a big move because of that amount of money coming in. Even if you didn't see that on your broker, this right here obviously is like some type of news reaction or something happening in the market to facilitate this pullback. And like, you can just look at this amount of momentum and know that it's going to move pretty far, right? Look at all these candles right here in this pullback, and then look at, let's just see how many candles this was right here. From this low all the way over to the point of the entry was 69 bars. Okay. From this entry down to here was, let's just look at 69 bars worth of momentum on this move, right? So 69 bars would be like right there, right? That is a bunch of momentum coming into the market. And that gives me the added confluence that, okay, I'm going to hold this trade a little bit longer. I'm going to milk it out. Obviously it's Friday, so I'm going to manage my expectations of how far it's going to go, but I'm still going to hold it a little bit longer, where in most cases I would just be taking a lot of my profit right here. This is such a big range. Again, another way to view it. This is such a big range that's formed that there's a lot of space to fill back in, regardless of what it does down here, regardless if this is a continuation up into the higher daily supply zone, regardless if it sells off from here and just falls to the weekly low that we're expecting. This is either way a big range that needs to be filled in. Okay. And that's the moves that I'm trying to capitalize on. That's why I am trading the lower time frames, because there's so many opportunities to trade. There's so many different ways to take advantage of that. Look, even if you were, let's say you showed up late, maybe you were late to the charts, you could still trade something like this, right? You could set a pending order right there. You could still go right here, and you could have targeted the top of this demand zone for a 1 to 3. Even if you're getting a 1 to 3 every day, that's totally fine. Or a couple times a week, that's totally fine. That's still a lot of money. These moves, when you start to break them down like this, when you start to see these charts the way that I'm teaching you to see them, you will start to see many, many different trade setups. And so I'm going to leave this video here. Basically, let me just, before I end it, let's just talk about the expectation again one more time of what could happen from this point. Okay. So there's a few things that we know. Let me go back up to our higher time frames. There's a few things we know. We know that price wicked right here. It failed to break this high. And it's now at least pulling back into the discount to continue this high. Now, there's a few ways that you can, you know, look at this setup right here. You can see this as a failed higher high. And now, you know, in my eyes, looking at this develop, it would be much more likely that price comes down to wick this low, and then it causing that change of character that's realigning with the pro trend move, right? So it could come down and do something like this and wick it and come back up and retrace back up and then continue back down. Okay, I know it's getting kind of messy, but that is something that it could do because we failed to make a higher high right here. Obviously, price can do whatever it wants. It can then just wick this low because it needed more liquidity to move up. Maybe we are going to go way up higher into this daily supply zone up here, and maybe it just needs more liquidity to do that. So maybe it didn't, you know, maybe this was just liquidity grab here. It's going to come back down, grab the liquidity below this, and do something like this. We have no way of knowing. There's literally no way to know. And so for those reasons, I'm on the lower time frames taking advantage of the momentum in between that. That's why I'm trading the 15-minute, the 5-minute, and the 1-minute. It's because I don't know what it's going to do. I don't need to know what it's going to do at this point in time. All I need to know is a general expectation of what is more likely to happen on these higher time frames, right? Because again, just to remind you, and then we'll wrap this video up, just to remind you, we had this daily break of swing structure. We have this newly defined daily range, and it would be very likely that price is going to, you know, come back up here to reprice this new range and then sell off. And so this is our expectation right here overall, but that doesn't need to happen. Nothing has to happen for us to make money, okay? So hopefully this video has been informative. I'm gonna leave this here. And then in some of the next videos, we'll probably just have more of a narrative on price rather than actually breaking it down for a trade. And again, in the later sections of the course, you're also going to have the ability to watch the trade plan videos to figure out where you fit into all of this information that you're learning. So again, I hope you enjoyed this video, and we'll see you in the next one.